Welcome into the Crypto Bunker podcast. Today, I wanted to emphasize what I have been trying to tell people about gold and silver is that the fact that we have topped, we've put in a major top, um, and I know that I made a video about a month ago about gold. I've been covering it, so hopefully people caught on and realized you know, and the situation in gold. Um, I think it's really interesting because it also shows that again, we sort of called the rally with tech and with the S&P and things like that as well. I should say I called it, not we. Obviously, it's just me. I put in the hours to do the research, um, put in the hours and the time for the charts. And to me, like you really have to go through the grind of the putting in the work, putting in the hours to understand the economy. You can't just like pull up a chart and think that you can tell what's going on. A lot of people can't. A lot of people can't do it. I do think that I have that ability. And so hopefully you guys recognize that. Hopefully you can subscribe to my channel. I know that my content level isn't the best at times. Obviously, it's just me, the mic, and the charts. I'm like cutting and doing like video edits, things like that. But in terms of like what you're gonna actually get out of it, you're actually gonna be able to know where to be in the markets. In my opinion, obviously, I'm not a financial advisor. I would like to be one day. I strive to be one. I love what I do and I think I've put in the time and in terms of about 3 years now of learning about all of these different economies, crypto markets, precious metals markets. And so obviously it might sound like I'm being cocky, but I basically called the top on Twitter. I said I guarantee that this is the top for gold, and it was. And we're completely crashing today. We're down 4% or so in gold. I've also called the top in silver. I sold a large portion of my physical silver, um, and basically got spot for it, which was nice. Um, Anyways, guys, I love what I do, so hopefully you guys get something out of the videos. Um, what I've talked about before, where I thought we might be in silver was we can look back at the crash that happened in 2008, and so that's why I have these circled. Um, and I actually think that it's a better view in dark mode with the moving averages personally. So I want to go back to that, but basically I said we were here because what I think happened was we obviously have this choppy rallies. That's basically what we've been having in silver for the past couple of years. Then we had a major crash, which we already have seen. And then we came up, we rallied, and then we completely dumped. Okay, so this is where I think we are. I think we're going to touch the 200-week moving average. Okay, so if we look at silver, that it's not far away. It's about 21.35. Now, there's also a case to be made as well that we are actually here. Okay, so I'm going to show that in gold. But what I think is possible here is that we actually have gone 1, 2, 3, 4 rallies. Okay, just like we did back here. We went 1, 2, 3, 4 rallies, and then we completely dumped. And that's why I have this trend line here, because that is a scenario that could happen where we go down to this trend line again. And as you can see, that is a large accumulation trend line zone. Um, I would, say that we have, really good support here at about 1360. I don't think it'll get that low. Obviously, I'm just putting that scenario out there. I don't know if that's going to happen necessarily. And I also think that gold, in terms of physical gold and physical silver, you should always have some. But like I said, I decided yesterday that I didn't want to have my savings, in something that could go down, to these lows, and then I need it, because for me, silver is like a savings account, but it's a long-term savings account. It's not a short-term savings account. Um, so if I need the money, um, then what happens? Well, I have to sell, and I basically have been selling this entire time around these levels. I'm trying to been basically $24. Anytime it would touch 24, I would try to sell. And to be honest, I took a loss on a lot of it because the premiums have been so crazy for multiple years now. Anyone that tells you, hey, I'm like up on my silver, they're not. They're everyone is down because and we didn't even make it back to where the most of the premiums are at. Most of the premiums are up here. So to actually buy a physical ounce of silver, you need to be up here at 28. And so that's mainly probably where I bought. Obviously, in 2020, I was buying, lower. Premiums were better. I've had opportunities to buy this low. I've definitely done that as well. I bought around this level when it was, uh, yeah, I've just been buying the whole time. And obviously, I'll continue to buy. But for me, um, for me, junk silver is actually what you want to own physically because it's just the safest asset to own because it's currency. So it's US currency. So, it's just the safest to own. Although the premiums on that have been crazy. I've been paying $30 silver to get premiums. And I believe that those premiums will come back down and that will be great, and that's what we want as long-term accumulators. So let's take a look at equities. What are equities doing? Well, equities, again, guys, this is all related. So understand that, let me just stop the share real quick and kind of explain something. So what's going on in the economy right now with the Federal Reserve? A lot of people are complaining that the Federal Reserve was not hawkish enough. We have a lot of people who are crying on their podcasts. I don't know if you guys watched like the Risk Reversal podcast with Dan Nathan and Danny Moses and those guys from CNBC, but they're complaining because they've been really bearish. Same with Liz Young. A lot of CNBC analysts have been bearish, and I think what we need to address is that you never bet against the American economy in the long run. So you can be bearish like I was for, a year and you might get away with it. Usually you won't. Usually it'll be less time than that. We've been in a bear market for over a year now, right? So at some point, the market is going to forward look in a positive direction. What we have to understand is that Powell, okay, the Federal Reserve, he's not out there to lessen the wealth gap. People literally started to think and say that he was there to, close the wealth gap between the rich and the poor. And I don't know if he said that directly and that's why people think that, or if they just kind of created this narrative that Powell is the new Volcker and all this stuff. We can't have interest rates be this high we have too much debt. We are going to have quantitative easing. That's the new environment that we're in. And with technology coming online and, new food sources, all this stuff. And I'm not saying that I'm going to participate in all of that, but a lot of people will. And it's going to bring costs down. So we're going to be eventually in a deflationary environment. I'm not saying that's guaranteed to happen now. I do think there's a possibility that we have a second spike in inflation, but right now inflation is crashing. And so that is what Powell wants. Powell wants inflation to come down. So as inflation's coming down, that means that Powell can kind of back off. He doesn't have to be as hawkish. They're still raising interest rates, right? But he doesn't have to be as much of a hawk. And so, I mean, people were literally acting as though he wants the stock market to crash. And I just don't think that that's the case. I think they got it. They got it to where they wanted. And now we could just see some chopping around, or we could see continuation. And to me, let's look at it. Right now, what we're seeing is a continuation. And this dip today got bought. And, it really got bought big time. And we're looking at this on the 2 hourly. We saw a dip and it got bought at 4134, which to me is very, very bullish, guys. Very bullish. That we started down the day almost 2%. I think we went down 2%. Okay. And yeah, and people bought the dip. Okay, they bought this dip. Let's look at the Qs on the 2 hourly. Massive dip buying, at the open. And so again, this is what we're seeing right now. Let's look at crypto. I've been trying to tell you guys, like, yes, I'm bullish. I've put my whole retirement account in equities. Um, you know, even just a week or two ago, and it's up a good amount just from that. And crypto to me looks a little weaker than the stocks, and I think what we could see happen here is, wow, DOT is mooning today. DOT is absolutely mooning. It's just not stopping. Wow, we're almost at $7 on DOT. That's crazy. That is crazy. Yeah, we're going on DOT. As you guys know, that's one of my bigger plays is Polkadot, and had been buying all this in this region. So, and even in this region, I mean, I've been buying just to keep it going. And I did think that Bitcoin dominance as well. Look at Bitcoin dominance on the 2 hourly, just getting murdered. This is an altcoin rally. I talked about ENS. ENS kind of looks weaker, to be honest. I kind of actually dropped my position in that. Sort of like a back and forth with me on ENS. Uniswap's been doing really well. That looks good. ETH and Bitcoin kind of going sideways, which creates this like altcoin environment. But to me, there still needs to, I mean, this is what could happen in crypto, just so you guys know. We could go sideways for a long time in ETH and Bitcoin and have an altcoin rally, and then alts rotate back to ETH and Bitcoin and take profits. I anticipate this being a very big possibility. We see the Dow Jones sort of acting as the Bitcoin of crypto. If we look at it, it's like it's going sideways. Okay, this is sideways action. And what's happening is that there's a rotation out of value and into growth. Okay, into the S&P, into big tech, into growth tech, and everyone's pissed. Everyone's mad because they thought that Powell was gonna let them buy the bottom at 3,200 S&P. And like, yes, that was my target, 32 S&P, but it didn't happen. And we have to reassess. We have to, I mean, just look at the double bottom we put in the Qs, for example. Okay, let's look at it on the weekly, because we put in a double bottom. That, like, look at the buying there. Bam, bam. That is a W bottom breakout on the weekly. I mean, to me, I mean, our target, my target, like, to be honest, guys, I know that this sounds crazy and it might not happen, but if inflation continues to come down, if the economy continues to be strong, if the consumer is strong, which we just had a really good jobs report, and people are saying, oh, that's bearish because the Fed's going to be hawkish. They're not going to be hawkish if inflation is crashing to the ground. Okay. And that's why gold is selling off. And that's what I was getting to at that time, was that it's a rotation out of gold, out of oil, out of energy, out of utilities, out of healthcare, out of consumer staples, out of the Dow Jones Industrial, and into these things because they were so oversold. So the rally, I mean, you're just betting on American innovation. You're saying, well, in 12 months from now, we're going to be okay. And I believe that that's the case. And I'm ready to be an optimist again. And I think that you should too. It's a better, it's just a better life. You don't want to bet against the American economy. And I think that some people did, and they continue to. And I understand it. I get it. Forward-looking valuations are at 20-1 S&P, and people saying that that's too expensive, and the financial, conditions are easing. But what you have right now is you have a scramble. you have a big, big scramble because so much money is in the is in cash and dollars. People need exposure to the S&P, and they fucked it up. And they're not, so now all these money managers have to flip over. They have to. There's no option. And so and the chart, I mean, we broke out. And like I said, we confirmed the breakout, and now we see the follow through. So hopefully you guys got something out of the video. Hopefully you guys are getting something out of the podcast. Like I said, I know the content's not the best. I'm going to try to improve that. But we're here I'm here making these calls. Okay. And the calls have been good, even since calling the top in ETH, calling the top in Avalanche and all those other coins. Okay. Calling the top in the S&P and the NASDAQ, calling the, gold rallies. Gold I've been a little bit off on because it's an emotional investment. It's a tough one. I did call the top on gold in last March. Okay. I sold a bunch of gold at the top. So again, guys, I'm just trying to remind people, and maybe there's new subscribers that are like, oh, this is like, the content's not great, whatever, cuts, different things that I'm not doing. I understand that. I'm not a professional podcaster. I'm trying to just kind of give you guys valuable information. It's really all about you. It's really all about giving you the information that you need to make these decisions. So again, hopefully you guys got something out of it. If you did, please like, subscribe, and have a great rest of your weekend.